Are you considering filing for Social Security? Have you heard something about a Social Security earnings test? What is this confusing Social Security earnings test all about? Hi, I'm Garrett Ray, financial advisor here at the Wealth Guardians and the Ray Financial Group.
And I'm Brice Payne, and you've entered The Vault, the Wealth Guardians video series on all things pertaining to retirement planning. In this episode, we're going to cover the Social Security earnings test that you may have heard about. What happens if you file for Social Security and you're still working? We're going to talk about FRA, PIA, and the different earnings tests. That's what we're going to talk about here today. It's not going to be a very long vault, but if you are so inclined to catch more of our vault episodes, we've got a number of them out there. You can hit those like and subscribe buttons that you see down below. Anyway, let's go ahead and get to it. First thing I want to talk about is why would the advisors at Wealth Guardians be qualified to talk to you about Social Security? Well, we are certified with the National Social Security Association and have been for close to 10 years. It is a complex topic and you want to get your advice from somebody who is qualified to talk about it. We here at the Wealth Guardians are retirement specialists. We are financial planners and we are fiduciaries. And when talking to our clients about what they need to do for planning for retirement, one of the most integral components of that is Social Security and how to file for it so that it is working to your best advantage. There's a lot of different ways to file for Social Security. We here at the Wealth Guardians sit down with about 50 households a year, and a majority of them become clients after we go through our planning process with them. One of the most common questions that we get from them when it comes to Social Security is something to the effect of, what is this earnings test that I've heard about? It's a relevant question and it's an important question. So that's what we want to talk to you about here today. Now, we have to get across the idea first, before we talk about the earnings test, is full retirement age.
Yep, or FRA.
FRA. Everybody has a full retirement age. For a majority of us, those who were born after 1960, our full retirement age is age 67. However, if you were born before 1964 or 1964 and before, your full retirement, 1954 or above. See, it gets complicated, like I said. If you were born at 1954 or before, your full retirement age is 66. If you were born in between those years, your full retirement age is 66 and 2 months, 66 and 4 months, 66 and 6 months, 66 and 8 months, and yes, you guessed it, 66 and 10 months if you were born in 1959. That is the year and month that you turn what Social Security offices dubbed full retirement age. We have to understand that concept, and you should right now take a pause and understand what your full retirement age is based on the year that you were born. Why is it important that we understand that? Because the rules for the earnings test is different before you were turned your full retirement age than after you turned your full retirement age. So let's take a moment and understand what our full retirement age is. For me and Garrett, it's 1960, so we were born after 1960, so therefore our full retirement age, at least as the laws are now, is age
67.
67.
Yeah.
All right. So let's say that you are not 67 yet, that you have not reached your full retirement age. Let's say that you're 64 and you're still working. So you have earned income, but you are thinking about filing for Social Security. If you are not your full retirement age, then you have to keep in mind, what is this earnings test? So the earnings test is that in the years before you turn your full retirement age, if you are making more than $21,240 in that year, you are allowed to make that, and there is no consequences to your Social Security. But what happens if you are 54 years old, you're working, you're making $21,242? So you've now made $2 more than what the earnings test is. And we are not talking about the year that you turn your full retirement age. Then what happens is the Social Security Administration is going to become aware that you made more than the earnings test, and they are going to withhold from you $1 for every $2 that you made above that earnings test amount. So as I said, that's $21,240. In our example, we said you made $21,242. $2 above that, they're going to withhold $1 from your Social Security. Now, they are not taking it from you. They are not keeping it from you. They are withholding it. There's a difference, and we'll explain that in a moment. What happens after that? Well, let's say this. You might ask yourself, well, wait a minute, how does Social Security know that I'm going to make more than that earnings test amount? Well, they don't. You should tell them if you don't want any unpleasant surprises. You should tell them, I am going to be making more than $21,240 this year, and I'm filing for Social Security, and I am not my full retirement age yet. Then they will know how much to withhold from you based on the information that you provide them. You can try to withhold that information from them, but it's only going to come back to bite you in the end. So I suggest if you know that you're going to make more than that, be upfront with the Social Security Administration at the time that you're filing. Let them know so they can adjust the numbers then and there, and you don't get an ugly letter from them later and have to pay them back something. That happens more often than you would think.
Yeah.
Now, that is, in the example that I gave you, it was somebody who was 64 years old. The rule changes in the year that you turn your full retirement age. So if your full retirement age is 67, maybe your birthday is in October, and you filed a couple of years ago for Social Security, and you've been working and you've been earning past the earnings limit, and they've been withholding a little bit from you. But now in the year that you turn your full retirement age, 67, now the rule changes. Now, and as I said in this example, you turn 67, full retirement age, in October. Well, what the Social Security Administration does is they allow you to make in that year $56,520 between the months of January and September. They do not count the month of October because that is the month that you turn your full retirement age. So they're not going to count that month. They'll just leave that one off. But the months prior to that, you are allowed to make $56,520. Now, that's the same amount whether or not your birthday or your full retirement age is in January, February, March, whenever. So somebody whose birthday is in October, well, they've got 9 months to make that $56,520. But what if your birthday was in February? Well, then that means that you can make that $56,520 just in the month of January alone and not be subjected to any earnings tests. Okay, now you have turned your full retirement age. And good news, all earnings tests is now off the table. What that means is now that you've turned your full retirement age, you are allowed to make the crazy amount of money that you want to, and there is no earnings test. They are not going to withhold anything from your Social Security anymore. But now that you have turned your full retirement age, Social Security Administration is going to go back and look at all of the monies that they withheld from you from the time that you first filed for Social Security up until your full retirement age. Maybe they withheld a couple $1,000s from you when you first filed at age 54. They withheld a couple $1,000s more when you were 55 and again in 56. But the year that you turned 57, because that amount had increased so much, they didn't withhold anything
67.
from you. What did I say?
67, yeah.
67.
Not 57.
Sorry, like I said, it's complicated. So now they've added up all the monies that they have withheld from you. Well, now that you have turned full retirement age, they go ahead and add all of those monies together and they start giving them back to you. Unfortunately, not in one lump sum, but they figure how much longer is this person going to live? Well, if you're 67 and they say that you're a female, your life expectancy is age 90. So they calculate how many months that is that you'll be receiving Social Security benefits, and they divide that thousands of dollars that they withheld from you up into a monthly payment, and they add that to your Social Security benefits from there on out. Yes, it would be nice if it was just a lump sum that you got back, but that's not the way it works. Unfortunately, as well, they do not credit you with any interest in the years and months that they withheld those benefits from you. But that's what the earnings test is. So it is something that you need to consider. And why do you need to consider that? Because it is easier than you think to bump yourself up into a higher tax bracket when it comes to how much of your Social Security is taxed. We're going to do another Vault episode on that. In fact, when the time comes that we have done it, the link will be right up here. If there's no link up there right now, we haven't done it yet. If there is a link over my head right now, then we have done it, and go ahead and click on that. But that's our Vault episode on how Social Security is taxed. That's a fun one as well that we'll get into at some point. That's what I wanted to cover with you here today. Garrett, thank you for being along on the ride here on
thank
this
you
one.
for
Good contributions. But that covers it for this episode of The Vault. Again, feel free to hit those like and subscribe buttons down below if you're so inclined. And remember, as always, the markets aren't going to wait for you. I'm Brice.
And I'm Garrett.
And this has been The Vault.